What if I told you with a new presidential nomination means one index, just one index, is going to go to the moon? And what if you had the opportunity to invest in that index right now? And if you could have did it a year ago, you would have made over 30% in 2.5 months. And today, you might make even 40% in the next 2.5 months. Sounds like a farce? No, my profiteers. We're talking about small caps, and small caps, my profiteers, are here to stay. Before we get started, though, as always, like, subscribe, share to our channel as we continue to grow. You know, I'm a certified financial planner, 17 years as a financial advisor, 11 years as a CFP, managed over $250 million in assets. But on these YouTube streets, me, Mario Payne, just giving information. But today, we're going to talk about how VP and now maybe presidential nomination and maybe presidential-elect as time goes on, Kamala Harris is going to get us the bag in this one sector. Lego. Now, my profiteers, you know I'm all about the slides. So what exactly is a small cap company, right? We heard of large cap, mid cap, small cap. A small cap company is a company that has in between $200 million in assets and $2 billion in assets. Now, we would think, how is a company small when they have $2 billion worth of assets? Well, my profiteers, that's a small cap. Your Pelletiers of the world, your DocuSigns of the world, your Carvanas of the world. These are companies that might not be turning a profit, but they have assets. They had a lot of funding coming their way, people investing in them, and they're making money. That is maybe churning or burning through their money more than they're making, but those are called small cap investments. And they're basically on the index, and that index is the Russell 2000. Those are small and mid-sized banks as well, energy companies, telecommunication companies, tech companies that are not startups, but they haven't blown up yet. Those are all small cap companies. And what just happened with Kamala Harris basically being the nominee for the Democratic Party, it shifted a whole bunch of things. Number one, the Fed. The Fed did not want to play politics. It was a 98% chance that the Fed was going to lower rates in September. When the Federal Reserve lowers interest rates, what does that do, my profiteers? That makes small caps get to the bag. Now, how do they get to the bag, you might ask? Well, they get to the bag because it costs less amount of money. Pause. It costs less amount of money when it comes to borrowing, right? If I'm a company and let's say I borrow $1 million and that $1 million is 10%, it's a lot of money, right? That is $100,000 of interest I have to pay. Now, let's say it's 2%. I go from paying $100,000 to now $20,000. That's an $80,000 difference. That, my profiteers, means a higher profit margin. When we have a higher profit margin, what happens? We make more money. We make more money. People on Wall Street appreciate that. And the big institutions buy our stock. So then our stock goes up in value. And now the retail investors, the me and yous of the world who's using Webull, Let Bob, the app, Robinhood, the app, they're buying those small portions. And then, of course, that small cap stock goes up. So by the Fed knowing now we have an election on our hands, by them lowering rates, it doesn't look like it was going to be playing politics. Some people thought that the Fed was not going to lower rates till after the election in November. But since they're probably going to lower rates in September, maybe even the end of July next week, then that's going to mean small caps will grow. Number two, increased investment. So when you have lower borrower costs, the small cap companies can now invest in more things. They can invest in those smaller companies. They can do more R&D, which is called research and development. And by doing that, if they hit big, it grows. Even when it comes to good news, right? The adage on Wall Street, what do? Buy the rumor, sell the news. So if it's a rumor out there that these companies are spending more money, they're blowing through their money, but in a positive way, that is going to be a good narrative. And we know from a Wall Street standpoint, a good narrative moves the stock in a good direction. Now, that ending of that story might not be good, but by then, the big banks and institutions, they invested their money, they grew it, and they probably sold it. So for those two reasons, I believe that large caps might not go up as much as small caps. So it's a couple small caps that we want to look at. You can either do an index or you can actually do stocks. From a diversification standpoint, index are always better because we have all 2000, right? The Russell 2000 all in one investment. Or we can be super aggressive. We can buy the index, but we can have it leveraged, which means if the index, like the Russell 2000, goes up by 1%, you make 3%. So a riskier way to have your money grow. But on the flip side, if that index goes down by 1%, my profiteers, you lose 3%. So the days that it goes down, you're going to be upset with yourself because you're going to lose 3 times as much. So basically check your risk tolerance to make sure that you can stomach it. But doing those leverage investments over the long haul can possibly be a way to invest in an index, but make a lot more money if it goes up over time. So my profiteers, we are going to go to the charts because it's a couple things from a historical standpoint that has happened not even a year ago. And because of that, I believe we're going to see a huge rally. And Tom Kane, the famed Tom Kane, boy, he gets so much time on CNBC. Him himself said that he thinks that small caps are going to go up by 40% over the next 10 weeks. Let's check that out. And then let's go to the charts.
Supporting the summer of small caps, as he said. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors, Head of Research, and a CNBC contributor. Tom, it's great to have you.
Great to see you.
You want to start with what the political news or the economic news? What's more important to you, do you think?
In the short term, it's the political news. But really, in the longer term, especially into year end, it's actually...
He looks like a trader, doesn't he? Just all out of whack. It looks like he's like, hey, man, you got 5 minutes. He just got out of bed. You know what I'm saying? Just, hey, I'll be here, man. Let me get on my Uber. Let me get here. He just looks so disheveled, but it's a wealth of information, Tom Lee. I said Tom Kane. Wow. Tom Lee.
Actually, the economic news.
Explain why.
Well, in the short term, markets are very sensitive to, especially the sector level, depending on whether it's a Republican or Democratic taking the White House in November, and then especially all the congressional elections and state elections. So I think that's what you saw last week is as probably shifted towards Trump, small caps, industrials, financials rallied.
And
very true, because after the assassination attempt, the thought process was Trump's getting in office, so things that individuals think that might be more Republican heavy, energy, the mega caps of the world will profit. And that's why we saw the market explode right after the assassination attempt, especially his stock, the Donald Trump stock. Oof, that exploded. But then it went down. So who knows?
And you're sticking with that call, which is for what, 40% over 10 weeks?
Yeah, the overlap is small caps are very sensitive to a Fed cut. And really the probability of a Fed cut, that it's finally happening. And I think it's going to look like the October to December 2023 rally, which was almost 30%. This one should be bigger because of the amount of short positioning and the amount of oversold in the Russell. So, yeah, 40% by the end of the summer.
Y'all heard that. Now, I know he looks disheveled, but Tom Lee knows his stuff. And 40%. 40% by the end of summer. That's like 9 weeks, you guys. Man, 40% in an index? Woo!
I just want to dig into it. Does it make sense that tech, that NVIDIA and Tesla and Microsoft and Apple and Meta should be outperforming as the odds rise for a Democratic victory?
Some of that, it's, day-to-day, it can be noise because last week you had the biggest down week for the NASDAQ in quite a long time. So I think there is a bit of a dead cat bounce. But to me, I agree with you. I don't think that the FANGs are necessarily a Kamala Harris, taking the White House trade.
But there is some evidence of the fading of...
Again, y'all. Man, does he want to be there or not? I don't know, but he's giving game. But, man, that makes you think, right? So because Typically now, Democrats are looking more towards Silicon Valley. Kamala's from basically Silicon Valley, right, in San Francisco. You would think that the rally today, where the market was up dramatically, was at her saying, hey, you guys donate to me. I'm going to keep you guys good. She raised $50 million on a Sunday. On a Sunday.
The Trump trade, as you mentioned, Russell's underperforming, Bitcoin weaker today, financials are lower, so are energy stocks.
Well, again, it's, the sell-off for the Russell started in the middle of last week. It's down almost 5%. It is a mirror image of what happened in October. After that first week rally, you had a 5% decline over 8 trading days, and then you had essentially a 25% rally for 7 weeks without a drawdown. I'm not sure that's any different today.
Is your long-standing optimism about deflation really?
All right. Now, I don't understand why they said Trump being drill baby drill is bad for energy. But let's get to the charts. And my profiteers, as we can see by the charts, looky here, looky here, looky here. So as we can see, what Tom Lee talked about, right? We definitely had our declined by basically 17% from August 23 to October 23. And then my profiteers, look at this. And Tom Lee was right? From bottom to top, we're looking at almost, not quite, but basically almost a 28% from October to December. We scratched that out, 30% from November to April. So 6 months, 30%, but literally 2 months, 26%. And he's saying 40%. He's saying the same thing is going to happen. And history does a crazy way to repeating itself, because we did have a downturn, right? We had one downturn, went down by 8%, right? The classic Head and Shoulders, not quite at 5%. But look at this explosion. Pause. But look at this, already up by 11%. So if he's saying 40% in 10 weeks, we're already 25% there. Already 25% there. So that means that it's another 30% increase in the next, give or take, 7 weeks. Wow. If that happens, presidential candidate Kamala Harris is going to shout from the moon tops that the market is pricing in her as the president, not Biden, not Trump, and saying, look what's happening. Historically, the market stalls in the summertime of a presidential election is actually going up in August into early September. So if that happens, a lot of momentum for the Harris, whoever she picks ticket, and also for us small cappers of the world. Now, get a little bit more aggressive. Again, check your risk tolerance for URTY. Look at here. Look at here. Again, this does 3X. So it goes down a lot more, right? As we can see from top to bottom, when the Russell went down by 15%, this went down by 48%. But on the flip side, if the Russell goes up like it did, 100% gain. Remember last time it went up by 25%, right? And then over this course, as we kind of move it over, that was over a 2-month time period, over a 6-month time period, 100%. You double your money in 6 months. Who says no to that? And already from top to bottom, this is up by 36%. When IWM, the Russell by itself, was up by 12%. So again, this gives you a lot more juice. Now, if things go haywire and Tom Lee is wrong, and this goes down and retraces back, then my profiteers were in trouble, because we have almost a 26% decline. But if you think that small caps will rally like it did at the end of last year, this is something that we might want to look into, but check your risk tolerance. As I rub hands like Birdman, profiteers, what do you guys think? Comment below. Tom Lee right? Is he wrong? We think that small caps are going to go up by 30% like he said. I mean, he said 40%. It's already up 10. So 30% in 8 weeks. Woo! Somebody's making money. Those profits can be painful, but painfully good if it happens like he's saying it's going to happen. Also, when you comment below, hit the like button, share, and also subscribe to our Patreon. A lot of good information like this in our Patreon. As a certified financial planner, I'll be dropping jewels, y'all. And also the slideshow about this is in one of our tiers as well. So as always, love is love. Let's make some painful profits together, y'all. Peace.
And you just wanna get paid, tired of making no money mistakes. Make a payment on your bills and you still late, yeah. Pay for profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes. Make a payment on your bills and you still late, pay for profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Been check to check, you know, and it could be different, you know.